Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, July 28th, 2021. What I'm going to cover, and in this order, I'll try to stick to it so you can jump ahead if you want to go to coverage of a particular security. We'll start out with the broad markets, large caps, small caps, mid cap, or just large and small caps, QQQ, SPY, IWM, and the respective futures. Then I'll talk a little bit on the FAANG stocks because that's without a doubt the most important thing going on in the markets this week. We have, I think, three of them out of the way now, two more to go. So I'll talk on that real quick. The semiconductors, somebody made mention in a comment that the semis have been holding the market up, and we actually have a flurry of those reporting as well. So I'm going to cover that. And then roll into updates on some of the recently highlighted trade ideas as well as sectors. So we'll talk on the DM trade I posted the other day, AMC, update on biotechs. I haven't updated that in a while, something worth noting there. I had some questions about coffee. Coffee's been ripping lately, so I'll cover that. Financials, and then oil, gold, and the US dollar and euro. Okay, so again, roughly in that order. Let's just dive into the charts since I have a lot to cover. I've been wrapping the videos up usually 20 minutes or less lately, so I'm going to shoot for that. We'll see if I can get it. All right, QQQ, nothing much to mention really new. We have the primary trend line. Again, that comes off the lows back from March of last year from COVID. Secondary trend line here on the daily chart. And then this very small minor trend line that forms a wedge, and we can see that better on the 60-minute chart. So this secondary trend line on the daily chart right here is my primary on the 60-minute chart. And so while yesterday's big red candle was certainly a breakdown, it was impulsive, everything I want to see. That again is a secondary sell signal. We had the first sell signal right here. Secondary sell signal here. Markets are holding up. They're not going down today. They're not really up much. It's virtually flat, 0.46% gain on the Qs. But remember, we still have two of the big market leading FAANG stocks to report. We have Facebook reporting tonight after the close and Amazon tomorrow. So once those are out of the way, that should give us the all clear. The market will then probably pick its direction. And so it is what it is. Either going to pan out or not. All I can tell you is what I see in the charts, and to me these are pretty clear sell signals. But again, the market tends to go into that holding pattern when the FAANGs are reporting. Nobody wants to really do too much in front of that. So rarely have I seen a big drop or really big down day or down period, trend, or a big uptrend right before they report. So that's that. Just sit tight, be patient, and this will either work out or not. Ideally, we want to see more downside here in the coming weeks and take out yesterday's candle if you're short. And if you are short, you're targeting. I've kind of gotten away on a lot of these trades. I'll throw out multiple targets and I'll leave the stops up to you guys. But again, depending on where you're targeting, I think it's very possible we'll see a move down here to at least that 310-ish level on QQQ in the coming weeks to months here, and that would be a drop of about 15%. So a 5% stop, if you're targeting that, for example, would make sense. If you're targeting a move down here to 297, which I see as certainly as a pretty decent likely possibility in the coming months. Again, it maybe even, well, we'll say months, because yeah, we'd certainly bounce before we got there if we're going there. But that's about a 18, almost 19% drop. So you give a little bit more on your stops. All right, let's move on. And again, we'll follow up once these Amazon's out of the way tomorrow. SPY, S&P 500. Same technical posture. We've been pushing these divergences, and I always say this. Divergences are not a guarantee of a trend reversal, but much more often than not, meaning well over 50% of the time, they foreshadow a trend reversal, whether they're bullish or bearish divergences. These are bearish divergences. And I often say, it's not as if they don't pan out. Sometimes they build, you get a correction, then another leg up, and the divergences continue to build. So we have some pretty thick divergences or pretty steep divergences in the indexes, but it's been a resilient trend, and most of the pullbacks have been getting bought up. Although the momentum is slowing down, we're grinding higher, but it's in a lot of market-leading stocks, we've been moving sideways for months now. Let's look at IWM, and then we'll zoom down to the 60-minute charts. IWM, there's an example of something that's just stalled out for months now. You can look at this. These are the small caps, and it's been going all the way back here to the beginning of the year, really. We entered this trading range in early January, and we're in the middle of it right now. So not going up, but not going down either. Make of it what you will. Obviously bullish if they can, small caps can break to the upside, and obviously bearish if they break to the downside. A downside break based on this pattern here, you can even call it a triple top. When you look up a triple top pattern, or typically the way I like to get the measured target, you look at the that range that it's in, recognize you have a triple top here. Actually, almost you could count those almost 5 tags, but 3 at that level. And the minimum target, or the measured target I should say, is the width of the pattern added to where it breaks down. So that would take us halfway, but again, I like this 170 level is a longer term swing target. But again, you're going to need to see 205 get taken out for that to happen. And here's my 60-minute chart of IWM going all the way back here. You can look back into, early February, really the beginning of the year again, and it just looks like an EKG. There's some levels marked here, but that's just that's what we're doing. We're going up, down, up, down, up, down. No forward progress, just sideways trading. So make of it what you will. That's why I've kind of backed off coverage or updates on IWM lately. When you look at the futures, I've posted a few charts there. Let me queue up RTY, the small cap futures here, if I can find it. And that's what that looks like. We put in a divergent high back here. We had a trend line break and a sell signal. Nice correction. Put up this uptrend line, another sell signal there, breakdown. Bigger correction that ended with this divergence here on the RSI, which so far has been the catalyst for this little rally. And again, these are some old levels, old targets, but I don't have a strong read on the small caps when we move on. I do have a better read on the large caps, particularly NQ. As I mentioned, I suspect this bounce is about run its course today. This is the 60-minute chart. Again, my primary trend line on the 60-minute chart, which was the secondary trend line on the daily chart. Breakdown, back test, and another back test there. There's our minor trend line here on the 60-minute chart. Broke down with impulsive selling, hit that 14,788 target where we were at yesterday when I did the video, telling you I suspected that would be the end of the bounce or end of the drop. We probably bounce from there. So if you're an active trader, there was an opportunity to cover a short and reverse long. And again, where it stops, I'm favoring that this is about it, pretty much where we're at today. Again, call it intuition. I don't have a hard resistance level or anything there. If I really want to zoom in tight, you can see a little bit of minor resistance here. That was support around that level right there, support, and then we broke down. That helped to validate that support level, if you will, with an impulsive drop, and we rallied back to it. So again, that's where I think the counter trend bounce will stop, about where it did today. And then you can look at the 60-minute trend indicator. I like to look at it, the zero line, which is in the middle there on the PPO. When the PPO, the white line, signal lines above there, the trend is bullish, as it was this whole time there. And when you cross below, as you are now, the trend is bearish. And quite often when you have a bearish trend, when that the signal line, the white lines below there, the zero line, again right here in the middle, will act as resistance when tested from below. So that's what we'll be looking for. Do we get a rejection here to keep this near term, or help tell us that we're in a near-term downtrend with another leg down to come? And on the 60-minute chart of ES, the S&P 500 futures, well, same story. We had a divergent high there, and it's not as if the divergence didn't play out. We had it on both the PPO and the RSI, and it played out for correction. Hit this support level right there for 223. Bounce, put in a marginal new high, which just extended those previous divergences here on the RSI, and put in a new divergent high there on the PPO recently. And so that's it. We're kind of, again, not really going up, but we're not going down for the last few days. So make of it what you will. And I'm still leaning towards another leg down here. Okay, and a quick update on the FAAMGs. Apple, the largest of the bunch. down 1% today, as expected. I said this a week or so ago. I said, look, I expect nothing less than a blowout quarter from most of these FAANG stocks. That's typical. That's Apple's MO. Come out with record numbers, record profits, record iPhone sales, all that good stuff. And the trend or the MO has been buy the rumor, the leading up to that. These are the earnings lines. I don't know if you can see it here on the chart. That's fourth quarter earnings, divergent high, and then it was followed by a double-digit correction. First quarter earnings right here, followed by another correction, sell-off. And here's our report yesterday. So far, the stock is selling off down 1%. Nothing big, but technically there is something to note. It took out that trend line. I gave you this uptrend line right here on the daily chart. You can also replicate that on the 60-minute chart. And we are trading below that now. So it's not much, or not really dropping big, 1%, but is below that trend line there. So we'll see. Bullish if Apple can recover that, especially today. This would be what we call a stick save in the last hour of trading. We have an hour to go. If it can get back on or close enough to that line, or especially above it, well, then that's just an intraday whip, and it holds the trend line. So that's something I'll look for. If we close below it, what you want to see tomorrow, if you're short the markets or short Apple, you'd want to see another red stick as follow-up to that. Here's Microsoft. They also reported last night. And they also, well, Microsoft had already taken out its comparable uptrend line. This is again a daily chart. I'm zoomed in a bit here. Same story. You had the divergences building for quite a while. This was a divergent high in Apple or Microsoft here, followed by a correction. There was our fourth quarter earnings back there. I don't have all the earnings marked, but this is the July 27th earnings right there. And again, another one that is down today following earnings. And again, from a technical perspective, make what you want. Talk about earnings all day long, and it should be that, but that's fundamental analysis. Most of what this site is is technical analysis using the charts, which I believe are a much more accurate predictor of where stocks are going, especially in the near term. When you can marry the two together, all the better. When you can make a bullish fundamental case and a bullish technical case on a company, especially for investments, longer term positions. But when you're swing trading, especially looking out just days to weeks or months, that's where technical analysis is going to help. So, like I said, that's Apple and Microsoft both on sell signals along with the market right now. Hence my expectation for more downside. Amazon, they're going to report tomorrow night after the bell, and there's a similar uptrend line. They're still above it. I don't expect much to happen before then. Even if it did break down today, it wouldn't mean much to me, because if a stock breaks down or breaks out right before they report earnings, there's a good chance that'll prove to be a whipsaw. So you always want to wait until earnings are out of the way to really put a lot of weighting into a breakout or breakdown on a stock like this. And then Facebook after the bell today. So that's it. So we have that'll be it. Facebook reports tonight, Amazon tomorrow, and then hopefully this market will figure out which way it wants to go. Okay, and somebody in the one of the comments under one of the recent posts mentioned that the semis are holding the market up. Semis are holding up at least, and because of that, the market's not going down. That's absolutely correct. Technology is by far the biggest component of both the S&P 500 as well as the NASDAQ 100, and the semis are really the crux of they're at least the canary in the coal mine for the tech sector as a whole. They're a subset of the technology sector, obviously, and you can see again here's another sector that's not going down, but it's not going up now for pretty much all year. There's January. Here's the beginning of the year. We entered. Broke above this 388-ish level right there, and that's it. We've been trading in a range since then. We're a little closer to the top of the range, almost at the midpoint of the range right there, and you can see it's these divergences again. Last time we had divergence, well, we had it here. Let me clean up all this. Let me turn off I'll leave on the trend lines right now to show you the divergences, but there's an example. Negative divergence at this point, boom, correction. How much was that correction? Well, that drop was 15.38%. Shows in the pop-up box to the left when I do that. This next one, we had a divergent high right here. From this point to this point, lower highs In the indicators, higher highs and prices, and better than oh no, that was about the same, maybe 14, maybe a hair less, another correction. And this is just simply an extension of those same divergences getting bigger and bigger. And as such, that, well, whether it plays out or not, that I can't guarantee you, but it is indicative of an even larger drop to come. Where to? I would say at least that 366 target right there, and if not, maybe even some of these. But again, first things first. There's a lot of work to do before we can get, call for a drop down to there. Can't be ruled out, but we're going to need to start seeing some downside. There's, of course, we can zoom into the 15-minute charts and 60-minute charts. I'm not going to do that right now, but we could identify some minor resistance or support levels that need to be taken out. However, I did want to mention this one because we have quite a few of those companies reporting coming up here tonight. We have Qualcomm. This is one of the big ones here. This is a $163 billion company by market cap. There's a near-term uptrend line and a very, very significant level right here, about, give or take, 143.25. Why is that significant? Well, you have a big old gap, big gap right there. And once gapped up, you can see that gap. We have dozens of candlesticks back testing that, telling us this was a significant support level right there. Technical analysis says support once broken becomes resistance. We broke it there, had a nice correction, try it again, try it again, try it again, try it again. Dozens of attempts right here. So a lot of, that's a big level to me, bottom line. And so this one's sandwiched between support and resistance in what we call an ascending triangle pattern. There's your top line there, a horizontal line, and there's an uptrend line. So this would most likely determine, whichever way this thing breaks, the next trend in Qualcomm. Anything other than a whipsaw. Sometimes you do get whipsaws right after earnings. So if you break up or down and then reverse, keep that in mind. But take it for what it's worth. These are the levels I'm watching, and that's again a big one. So that will, may determine where the semis head from here after they report. And if so, then the semis will determine where tech goes. A couple others reporting. We have Lam Research, LRCX. This is the best trend line I can give you right there. One level I want to add a line right there. So pretty much we've been diverging up to this point. It was a divergent high, negative divergence right there. Extend that line out. Best trend line I could give you is that. I just want to show you what the chart looks like. And if it breaks, if it goes to the upside, look, this is at a multi-year all-time high, so I don't have any targets for you other than a breakout above the recent highs is going to be bullish, so about 677. But if it breaks down, I see this one coming all the way back down here to 381 down to 341, and that would be a drop of anywhere from about 40 to 45, 46%. Okay, had to pause the video for a second for an interruption. All right, so this is it. So anyways, those are the levels. You can see the divergences, that minor trend line. But I don't see a whole lot of support. There's some along the way, but I think this one, if we break to the downside, going to come all the way back in here about 381 to maybe 341. And that's a pretty aggressive drop. That's about a 40 to 45% drop. Chart says see weekly. Here's what my weekly chart looks like. There's our uptrend line right there on the weekly, and most recent little divergent high right here. And we've been building divergence on the RSI for a while. So from a weekly swing perspective, I'd say about 338, meaning a weekly trend trade. That's again, that's a pretty aggressive target, but that'd be about a 50% drop. And can't rule out a drop all the way back here to 229, but obviously it's going to take a major trend change in the market to get that. And the last one I'll cover, there's others coming up reporting tonight, but this is the last one I'll cover, Xilinx, XLNX. And again, just kind of a sloppy, we peaked here with a divergent high, just like we peaked here with a divergent high. After that one, we had a major correction there. And so far, we've been correcting in this one. And I have pretty good resistance there, about 145.51, and then support right here, about 115 or so. So we'll watch those, see how the semis react after tonight. So again, take away from this, after Facebook and Amazon tomorrow, and a lot of the semis tonight, this market I would say by next week, Friday usually doesn't do a whole lot. We'll see. But we should have a good idea next week if any of these divergences in recent sell signals are going to play out or not. Okay, so much for that. Let me jump over and cover just a few other sectors. I might be jumping out of order here from what I said I'd do in the beginning, but I'm on sectors right now with the semis, or I just finished that. So I wanted to update the biotechs. A couple months back here, I highlighted this breakdown, divergent highs, sell signals on the biotechs, laid out this target right here, 122.43, and that was hit recently. We hit it right here, had a nice overshoot. See that green candle down through there, but it's green. That my candles are colored to show end of day close, so that means we broke the support intraday, closed back above it. Tried to break at it again intraday, closed right on it. Held that support like a champ, and again that level was laid out well in advance. We did so with divergences in place, you can see there, and everything else. So we had a bounce, we had a rally off that level, which is usual on the initial tag of a target from below. We bounced up, and I believe in my last coverage I listed this as resistance here, 139.59. I'm going to move that line right now just to come in nice and tight to these previous reactions right here and here. So about 141. So this is the biotechs. We are smack between, or right now we're coming off support. A break of this support obviously would be bearish and open the door for a move down to that next target there, about 108. If you're a bullish long side trader, remember we are in earnings season, so you want to see, if you have any big biotechs reporting that could move the needle. But you could make a case to step in long, swing up to the top of the range, or wait for a break and then short on the way down. There's that trend indicator. I have that line a little below the zero line, so you can see we're still above it right now. So we're either going to hold here, rally up, and if so, 141 would be your upside target, or we break to the downside. And as I mentioned, the next downside stop should be 108. And an update on the financials. I was harping on these a lot back here, waiting for the sell signal, which finally came. We broke the primary trend line right there after the divergent high. Hit my first target as expected, bounced, reaction off the initial tag, bounced to that resistance there, about $37, and we've been bouncing between there. So there's another trading range. And again, break to the upside, bullish, break to the downside, bearish. Why am I favoring that? Well, because of my outlook on the market and the fact that I had two additional targets, only the first of which has been hit. And so that's T2 at 32.83, T3 at 35.31. But it would make sense to put a stop somewhat above that $37 level, especially on a closing basis. And I'll also say this, the financials are grinding around in trading range. They've already reported, all the big ones have. So, you could be stuck in that range for a while. Just want to say that it is objective to short at 37 on rallies up to it or close to it, or even to go long on a break above it, or to cover a short trade, or you wait if you are swing trading it now and you're looking to add, you can wait for a break of 35, 33 or so. We'll call it $35. And this is KRE, the regional bank sector ETF. There's a little downtrend line, which is starting to get popped, but not impulsively. Bigger level here was my first target there at 63.75, former support hit right there. And now the support, once broken, becomes resistance. So same thing. I have the financials, at a level where they could pop and run, or get rejected and head on down to the next potential targets to the downside. Updates on some of the recently highlighted trades. DM really isn't doing too much yet. This is the daily chart. I point out this divergent low right here, overbought readings on the daily, and I like it on the 60-minute chart. Still like this trade. As I said the other day, it hasn't blasted off or anything yet. It was a long here on the back test of this trend line, and moving up, but not yet to our first target at this point. T1 966, T2 997, T3 1026, and T4 1161. As with almost all the trades now, what I call, I'm not doing the price target adjustments, but I will mention, when it's a $10 stock you want to come in pretty tight. You can come in just a couple cents below. I'm talking about your sell limit order. So if you're targeting the resistance level at 966, you could put it at 965 or 964 to be safe. Yeah, I'd say 964, 963 even on that one, because there's some reactions a little bit below there. And something like this, you might have your sell limit if you're holding out for T4, maybe at 1156 or something like that, under the 5 cents below the 1161. AMC, I just posted an update today, so I won't spend a lot of time on it. But there's that trend line. That was a target on the way down. It was hit there. We got the reaction as expected, meaning this buyer stepped in. They stepped in again. And we're still above the trend line, so we need to see that break. And I also had 33.13 as a target. They were intersecting targets. They came in around the same level. Both were hit, one after the other. And so break of the trend line, and especially 33.13. As I said, based on my analysis, I think it's going to be a pretty swift, mostly unidirectional. Don't get me wrong, it's not going to drop straight there. It'll be counter-trend rallies, but I don't have much support until that 1460-ish level right there. But, very important, as I said earlier today, it's a setup. The sell signal or the catalyst for the next leg down is pending a breakdown of those levels. It's still above support. Support so far has held. So you can look at this any way you want, and you don't short right on above support. You short a break below support, or you short a rally into resistance, such as the trend line here in that $52 level, and you could have a stop somewhat above. Because obviously that'd be bullish if they could pop $52 and that downtrend line right there. I'm trying to extend that. No, just move that line. Well, we'll fix that later. Okay, moving on to the next one. Forget about the 20-minute mark. We're already 26 minutes into this, but I'm almost there. I already covered biotechs, financials. Oh yeah, gold, US dollar, and oil. I can knock those off quick. I'm going to stick with the chart of gold futures now because I'm really just focused on that near term. I'm still longer term bullish on gold. And this is the 60-minute chart of GC gold futures. That was our bullish falling wedge. There was our divergent low. There was our breakout buy signal. T1 hit right here. T2 hit right here. And so this is the downtrend line I'm watching right now. Put in a little divergent low right there. Just need to pop that, and I think it's coming. I think it'll happen soon. We've been consolidating here, holding above that buy zone, support zone right there. Still very much like it, but like anything, you don't get married to it. If it does pop below, you could give it some room, because what I'm going to show you here, I made a mess of these lines. Look at this scenario. You have the downtrend line, you have this divergence line. Let's just extend that divergence line and extend the divergence that's in place now. So any marginal new low, and it would be a nice what we call bear trap, or flush out move if we drop below that support zone and then reversed. So two ways to do it. If we broke down, you could take a shot at it. It's very aggressive to go long in a breakdown, but you could do it with stops somewhat below. Manage your stops. The other thing is to wait for a breakdown. If it happens and we snap back and regain the level, especially then break out, that's going to be very bullish, because bear traps or false sell signals tend to be quite bullish. And that would probably be followed by a pretty swift move up to my next target, T3 there, and ultimately T4. So still liking gold, still liking silver. Silver should move with it. This is silver on the 60-minute chart. Silver futures, the positive divergences continue to build. Don't have a sharp trend line to use. That's why I don't have one there, but I do have targets there at 25.76 or so, 27.51-ish, and potentially 28.49 right there for silver futures SI. And they have also, just like gold, they have a micro or mini contract you can use if you don't want to use the big contract size of silver. And then of course the US dollar and euro. That's a big part of my analysis here. There's the trend line on the dollar, recently broken, back test 1, back test 2, moving lower since, rejected off this downtrend line and headed down here to my next target at 92, first target I should say, 92.063, and then these additional targets. So that's still my preferred scenario for the dollar, and if it plays out, that should be bullish for gold. And the euro, of course, is the dollar in reverse pretty much. and that's E7 Euro futures. And there was the breakout right here, back test, and we're moving higher. And if you zoom in nice and tight, you can see so far it's not really taking off, but we're making a series of higher lows here, or higher highs I should say, and higher lows. That's the making of an uptrend. 1, 2, 3 higher lows, and 1, 2, 3 higher highs. And I think as the masses start to realize this is broken out, you'll start to see this rally pick up steam. And remember, rising euro equates with a falling dollar, and both of those are bullish for gold. Okay, last two I want to cover. We're right at the 30-minute mark. I want to cover crude oil. No change there. We're at that resistance at 72.63, which was, I believe, it was a target on the way down. Support, hit it, then we hit that 70.42, then we hit this one. But we continue to have divergence in place, and I still favor more downside. And finally, somebody inquired about coffee. Actually, a couple people did in one of the recent comment sections. And my apologies for kind of, I want to say missing this one, at least lately. I haven't updated it, and I should have, because most recently I had mentioned quite often in the last couple months that this was what I viewed as a basing pattern, a major basing pattern after an extended bear market in coffee in a lot of commodities. And then the fact that we finally broke out of it recently, I said, break above the top of that range would be bullish, and that's what happened. Look how impulsive the move has been. So again, shame on me for not highlighting that recently. I can't keep on track on top of each and every one of these commodities. Most recently was focusing on wheat and corn. We had a nice trade there we caught. I'm still bullish on lumber longer term. I think it's pounding out a bottom. I'll probably update that in another video. It's almost flat today. But there's a move, and again, that's longer term bullish on coffee. We don't have a long-term chart on JO because this is the same company, iPath, used to have a JO, which I covered for many years on the site, but then they decided to revamp these, and that's now JJOFF or something like that. Trades like on the over-the-counter, pink sheets or something, I don't know. So this is the more liquid of the two. But let me show you this chart. This will help paint the longer-term picture where we're going for those of you in it. Coffee. This is my daily chart of coffee futures. I'm sorry, weekly. So this paints the bigger picture. And going back all the way back here in 2019, we nailed the entry. Now I posted this, and many times thereafter I've covered this chart. For a long-term analysis, I gave you 3 price targets: 140, roughly 170, and almost 230, about 225. And we hit the first one to the button. That was back then. Our buy signal was a breakout of this bullish falling wedge pattern right here. In fact, let me show you something. I've had that chart queued up here somewhere. Let's see, there it is. Okay, this was posted, there it is, timestamp back in May 24th of 2019. That is that same exact, touched this chart, these lines have not been moved. There was our bullish falling wedge, and I issued the buy signal right after that. We got the breakout just after posting this, and there were those targets laid out, the 140, 170, and the 225. So these levels have not been touched, and now we're about to hit this one. And so again, that was the old chart posted back on May 24th, and that was then. This is now, and you can see this is how it played out. That's that same bullish falling wedge right there. You can see the breakout. We hit my first target. A swing or even a trend trader was able to sidestep it. I made the case back then for a correction in coffee, suggesting book profits, and it's been just nothing but a beautiful bull market since. We went on, we recently hit that second target there for a 90% gain, and so where I'm going with this is where it's probably going to stop would be that was at that point in time my final target. Now I do believe we're in a new era, a new bull market in commodities. I mean, coffee has been in a bull market, bottom back here in 02, and kind of moved sideways like a lot of things. It even had a bear market within there, like most commodities, bottom back here, but since then it's been bullish. So right now, look, I wouldn't chase it at this point. I think it's going there? Yes, but we're in no man's land. No man's land to me is what I call a security when it's smack between support, which now is about 160, and resistance, which is about 220, 225, 228, something like that. And so therefore, if you're in it, great. Trail up stops, protect, keep your, protect your profits. But we'll have to look for the next trade. And additional targets, well, should it blast on through there? And I've always said this, don't underestimate just how far and fast coffee can go when it wants to run. It does this, just like lumber. It tends to have these one-sided trades where either everybody's long and the thing's flying up almost parabolically, or everybody's getting out, selling it, and it falls hard. So don't fight the trend. We'll look for the next one. If it happens to blast on through that 230 level, I do expect a reaction there, by the way. But if it happens to, this is our next resistance, that previous all-time high from 2011 right there, up around 310 or so. Okay, and the last chart is KC coffee futures on this charting platform. On stockcharts.com, they use $coffee, and on most other, if you're trading on the exchanges, you're going to use a symbol KC for coffee futures. So on the 60-minute chart here, we did put in a divergent high, and we did get a pullback. Again, do you want to go shorting it from that? Probably not. There was also some support right there. I can see that it held. So those are your levels. If you're long, you want a tight stop there. Next stop would be under this reaction low there, and so forth and so on. But again, near term, I just want to update that for those of you in it. I don't see an objective entry right here, but I do believe, before it has a big down, it's probably going to go up a little more and hit that target I gave you back a couple of years ago. All right, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.